Hello traders and welcome to another video review. Today is Wednesday, August 13th, 2023. Let's take a look at the Forex calendar for today. I've just highlighted the most important data releases for today, and the first of them is the German CPI from the Germany, of course, scheduled for release at 2 o'clock, and this time we are looking for the number of 0.3%, just as the month before. More data from the US labor market are coming our way. ADP non-farm employment change is scheduled for release at 2:15. Then the GDP from the US is scheduled for release at 2:30. The numbers we are looking for the second quarter is 2.4%, which is 0.4% better, should be. At least it's forecasting like that, than the previous reading of the first quarter of 2%. Pending home sales are scheduled for release at 4 o'clock, and the crude oil inventories are scheduled for release at 5 o'clock. So this is the current Forex calendar of the most important data releases during the day of Wednesday. And we should start our technical part, I guess, with the euro dollar. So let's switch to the euro dollar for our chart now. For our chart of the euro dollar is showing us a nice spike. Let's investigate what is going on here on the 4-hour chart. So we got this spike to the upside, as you can see here. So we could easily say that this is the technical support. This is the level of the technical support, 1.0767. Then there is 1.0842. This level had been violated. Big spike to the upside. Recent high was made at 1.0893, just below 1.0887. So that's the level of the local high. Very nice development, but we can still move higher. We can still move towards the level of 1.0931. This is the level of the technical resistance and spike high from the August 22. So right now a little bit of the pullback mode, because the momentum is currently roughly around the level of 59, so not that bad at all. Strong momentum, positive momentum. Bulls are in charge of this market. The question remains whether this is a one-off spike or this is something much more serious for the bulls, of course, right? So let's just place the horizontal line for the swing high 1.0893, and let's wait for another wave to the upside in order to test this level. The level is of course this one, right? So that's our this is our next target for the bulls. Now the key level here is the technical support, 1.0842. So any breakout below means that most likely this one just one-off spike to the upside, and then the market will continue to move lower. So that's the outlook for the euro dollar. Let's see what else spiked together with the euro dollar. Let's find out what is going on the gold. For our chart of the gold has the spike as well. Let's just investigate a little bit further. So where is the key technical resistance? We can see that the key technical resistance might be located somewhere around these two levels here. 1947, 1940. So that's the key. As you can see, this is the key technical resistance. It's a kind of a zone right now. Let's just zoom in a little bit closer to the current situation. So the spike high was actually made at the level of 1937. Local high 1937 as well. So now is the pullback time, because we hit extremely overbought market conditions on the 4-hour chart. Where can we retrace? Well, the best can retrace towards the level of the newest one is 1925. So let's stick to the newest data. or even a little bit lower, because the next level is located slightly lower at 1,922. So that's only $3 of the difference. Now we got a solid technical support, 1,884. So we will mark it as a thick green line. There's one more thing we can add to help us with our analysis, and this is the short-term trend line. Short-term trend line support. We already, of course, are trading above the short-term trend line support. We are already trading above the 50 and 100 moving average. So the outlook remains bullish as long as the pullback will not break below the technical support and will not break below the trend line as well. So that's the gold. What else is going on? We'll take a look at the US dollar to the Japanese yen. It should apparently show us the situation, the clear situation here on this market as well. Let me just clarify my charts, and what you see here is a big spike down. Let's investigate a little bit further. So zoom in. What do we have? What do we have here? The first thing is that we got the swing high. The new swing high is located at 147.38. This level will act right now as the technical resistance as well. Swing high, technical resistance. The spike down low is 145.87, but the overall low is 145.69. This level will act as the technical support, as you can see, quite close to the lows from 25th of the August. Right now the bounce is coming towards the 50 periods of the moving average on the 4-hour chart. So we are testing this level 146.57, and the spike down momentum went even towards the level of 45. But right now we are still back under the 54. Nevertheless, we are coming off the extremely overbought levels, extremely overbought market conditions. So we should see some sort of the downside movement soon. Now, this pattern that you see on the 4-hour chart, let me just show you which one. This pattern here is, of course, the bearish engulfing, and this pattern very often is being made at the top of the move to the upside. Okay, so the bearish engulfing is here. Now what is the next probable scenario here is, let me just take the ABC. So what can happen is that we will go from the top. That was the wave A, that will be the wave B. We are missing the wave C, and we can reach even 144.55. So that's the low from the August 23rd. Okay, if this pattern is in 3 waves, and then of course the market can continue to the upside. However, if this pattern will turn out to be the 5-wave impulsive pattern to the downside, then of course this cycle will be considered as the new cycle to the downside, and we can expect more downside to come in the coming days. So last market we are going to take a look at is the Bitcoin, and the Bitcoin spiked massively to the upside, and it is roughly approaching the technical resistance level at 28,661. So this is the key technical resistance level. Let me just guys place an arrow so we know what we are talking about, and this arrow is roughly here. So I'm talking about this level. The local high was 28,136. Now we are pulling back a little bit lower. We can even test the level of 26,779, which is the technical support right now. So as long as we trade above this level, the outlook remains bullish, with a potential target for the boost located, of course, let me just take the arrow, located of course at the technical resistance. This technical resistance must be tested by the boost. Of course, extremely overbought market conditions, 82 points. Now we're cooling off, we are coming lower, but this looks only as a corrective cycle or like a pullback. The market is ready to spike even higher. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.